Welcome to Thrive Hive. Today we are going to be talking with Marc Caraska, a local business attorney, and he is going to be going over the importance of having a corporation and if you need a corporation and how all that type of stuff works. Also, the ins and outs of LLCs and whether you should have an LLC or a corporation. Thanks for coming.
Thanks for having me.
So I have heard a lot of agents and stuff will come up to me and they will say, hey, I just signed up for an LLC and I don't know what to do from here, and they're kind of getting a bunch of things mixed up. So what is the difference first off between an LLC and a corporation?
So an LLC was designed to be an easy corporation. It was designed for people who had a small business that didn't need or want to go through the process of having a full-on corporation. In most states, an LLC is a great alternative, and also an LLC is a pass-through entity, and by that we mean the corporation itself, the LLC, doesn't pay tax in its own right. The income is fed through to the person, the owner's return, and that's where the tax is paid. So in most states, LLCs are wonderful. But when California instituted the LLC about 10 or 15 years ago, they decided to put the California spin on it, and they tax LLCs in California. Not only did they decide to tax LLCs in their own right, but it's a gross receipts tax, meaning if your LLC has sales of $100,000 and expenses of $200,000, you've lost money for the year, California still has its hand out and says, you owe us money. So for that reason and another reason, the other reason being the idea for most people, most agents, to have a corporation is to avoid the self-employment tax. And in California, the LLC does not do that because it's a pure pass-through. The income goes on your tax return under Schedule C, which is the same schedule you're probably using if you don't have a corporation, and you still pay the self-employment tax. So for those two reasons, LLCs are not good for real estate agents in particular, small businesses in general in California. The tried and true S Corp, which is a corporation, a regular corporation that files what's called an S election with the IRS, that makes it a pass-through. So the income is still taxed only on the person's tax return, but one, the S Corp files its own tax return, so you avoid self-employment tax. Two, California still has its hand out because California has to have its hand out, but it's to the extent of net income. So the S corporation in California will pay an income tax of 2.5% with a minimum of $800, which is the same for the LLC. The LLC still pays a minimum of $800. But you get the benefit of no self-employment tax, which is a 15% on your federal return. So in most cases, it still makes economic sense to do an S corporation if you have earnings, if your business has earnings. Now, if you're brand new and you don't yet have income, I might recommend waiting because you don't need to pay for a corporation and the $800 minimum until you have at least $10,000 or $15,000 of net income. It's a pretty low bar, but
of net income.
Of net income.
Why would it be that you have to have net income? So, say an agent or a business owner has, let's say, $70,000 of income coming in, and they're writing the normal stuff off, advertising, stuff like that, and it drops it down to $15,000 of net income. Is that what you're talking about?
That's what I'm talking about.
Okay.
Yeah, so then you should still be a corp because that $15,000 of net income is, if I can do the math in my head, almost $2,000 of self-employment tax, not income tax, self-employment tax on top of what you're going to pay in income tax. And so that $2,000 is more than it would cost you to be an S corp.
Okay.
The $800 minimum, whatever it would cost to do the tax return, you're still dollars ahead. That's why I said there's a break-even point that
Okay.
Yeah.
Now, most self-employed people are just out there as a self-employed, a licensed real estate agent, a licensed contractor, a licensed whatever, right?
Right.
And they are receiving. So, what is the difference between just taking it in as a self-employed person and not having any corporations versus having the S corp, the tried and true S corp?
Yeah, so the big one is the self-employment tax. So if you're doing business as a corporation, let's say you net $100,000. Everybody knows you're going to pay California roughly 30% of that's going to be income tax. But if that $100,000 comes from, like I said, Schedule C of sole proprietor, you end up paying an additional 15%. In that case, $15,000 of self-employment tax. That's your Social Security for self-employed people. If you were a corporation, you wouldn't pay that self-employment tax. Now, the caveat's going to be at some point in the life of the corporation, you're going to have to put yourself on payroll. And once you're on payroll for some amount, and it doesn't need to be the full amount of income, it shouldn't be the full amount of income, but it should be a reasonable payroll. Your payroll taxes are basically that 15%. But like I said, in that scenario with $100,000, if you paid yourself $20,000 and $80,000 was profit from the corp, the profit's is the part that's not subject to the self-employment or payroll taxes. So that's what we're shooting for.
Okay.
Yeah.
Now, can your corporation, so let's say you do set up a corporation for somebody, can your corporation own assets within the corporation?
Yes,
So,
absolutely.
okay.
Yeah. And the most common is a car, right? Because especially for real estate agents, they buy a car. The corporation can own the car. The deductions are no different, really, whether you do it as self-employment or you do it as a corp. But it may be cheaper for your insurance. The corporation does give you some liability protection. It doesn't protect you from the acts that are related to your real estate license. Those you're responsible for. But if your car is owned by the corporation and it gets in an accident, you may have some liability protection there because it's not your personal asset, it's your corporate asset.
Now, do you know you probably don't know this with all the licensing boards, do they have to register their corporation with the licensing board itself? So let's say Joe Blow gets a corporation and it says, Joe Blow's Corp. Does he have to register that with like the DRE or the contractors board?
So that depends on the licensing agency as to whether or not you're doing business under that license. For the DRE in particular in California, you do not, because it's not the entity that's doing the activity. It's not a licensed entity. Okay. Which we probably should talk about too. The differences between the corporation being licensed and not. But that's going to be subject to whatever the licensing agency wants.
Okay.
Yeah.
Now you have your corporation completely set up, and what's the number that comes with the corporation?
So a corporation is a separate legal entity. So it is another person.
Okay.
So because it's another person, it's going to get a tax ID number. It's not a Social Security number, but it's basically the same thing. A Social Security number for a corp. It's a tax ID number. That corp needs to have a separate bank account, and you need to track the income and expense separately. Now, that sounds kind of onerous, but most people are already doing that, right? When you're doing your real estate business or your contractor business or whatever, you're keeping track of what you take in and what you put out because you need to know if I'm making money or not. Same thing with corporation. It just needs to be a separate bank account, and that's not to say that you can't spend that money, but you just need to be careful that when you need to buy something that's for the corporation, you write the check out of the corporate bank account. When you need to pay your home mortgage, you transfer that money from the corporation to your personal account and pay that mortgage out of your personal account, because that's the difference between a personal expense and a corporate expense, and you do need to keep those separate.
Okay.
Yeah, more separate than when you're a sole proprietor.
Okay. And so that leads to another good question. So if they do transfer that over to themselves, obviously they're not taking taxes out of it. So let's say their mortgage is $5,000. They transfer it from their business account over to their personal account, $5,000. How do they deal with the tax situation there?
So you call, what we do is we call that a corporate draw. So as the owner, you're drawing profits out of the company. As a corporate draw, if you're familiar with the balance sheet, that's in the capital section. It's not an income. It's not an expense. It's not income to you when you put it in your personal account. It's literally just moving the money. So how would I explain, let's say, for instance, you close a deal and you got a $6,000 commission check that goes into your bank account, your corporate bank account. It's income, $6,000. Out of that, you have to write a check for $1,000 for whatever staging, let's say. That's an expense. Now your corporation has $5,000 in cash and it's got $5,000 of net income. You could transfer that $5,000 of cash to your personal account and pay your mortgage payment, but the corporation now has zero cash, but still has $5,000 of income.
Okay.
So that's the key you got to remember. That's not a deduction when you move that money, and it's not income to you, but it's still income to the corp. So you do have to think ahead, which most people are doing anyway. Even if it's not a corp, you're thinking ahead. 30% of that's going to go to the government.
Okay.
But it's going to be on the corporate side.
Okay.
Yeah.
So when does that become a taxable event to you?
It's a taxable event when the corporation collects the money.
Okay.
But the tax is not due until you do the tax return the following year.
Okay. So what is the form that passes it through the income from you over, or from the corporation over to you?
So an S corp prepares its own tax return. It's a corporate return. It's an 1120S. That shows what your calculations are, the income, the expense, and it'll have a net income. That net income gets reported to you on Schedule K1 of that 1120S. And then your tax person or whatever, or if you do yourself, would report that as income from S corporations. You can have more than one.
Okay.
Which end up on your Schedule E instead of your Schedule C.
Okay.
As net income. And then that flows to the first page of your return and you end up paying tax on it at whatever rate. See, that's the beauty of the pass-through entity is instead of paying 34% corporate rate and then paying personal, it's at whatever rate you're at. So if you're married and you have a $100,000 corporation income, your rate's going to be a lot less than if you're married, your spouse earns $1 million and your corporation's throwing off $1 million. You're going to be at the higher rate. So it's whatever rate your personal return ends up being for that year.
Okay. So what you're saying is you can, through your corporation, you can eat up some of that income through the expenses, and then whatever's kind of left over passes through to you.
Correct.
As income at the end of the year.
Right. So all of the same thing that you're probably doing now to maximize expenses, you keep doing, but you do them through the corporate entity instead of your personal. That's where you can get into gray areas. Is this, I bought a widescreen TV for the office. Is that a corporate expense or is it personal? Well, if it's in the office, to me, it's corporate expense. If it's in the lobby or whatever. If your office is at home, well, maybe the same thing. But travel's a good one because, if you decide to take the family to Disneyland, that's clearly personal. But if you end up scheduling some meetings with another realtor down there and talk about referral stuff, at least part of that trip is now business. It's corporate. And the same is true whether you're a corporation or not. Same deductions, same rules. But you have by creating those meetings down there, you've created some business purpose to that trip. I'm never going to say you can deduct the Disneyland tickets because you can't.
Yeah.
But some of that travel, and maybe you had coffee or a meal with the person, clearly that's going to be deductible. So if it makes sense to you to reach out for business purposes, then absolutely deduct that as an expense. That's kind of the rule. If it makes sense that you would spend that money in expectation of earning more money, even if that expectation doesn't come through, it is a legitimate business deduction.
Okay. So at the end of the day, somebody should be making at least, somebody should be grossing at least what, 60, you think about 60 to 70,000 in order to set themselves up with a corporation?
Oh, I think the bar is a lot lower than that.
You do?
I think that if you're netting 10 to 15,
okay,
you can see the benefits of being a corp.
Okay.
Yeah.
Okay.
Tax-wise.
Yeah.
And again, we just kind of briefly went over the liability limits, and briefly because they don't take much of an effect for professionals. If you're a plumber or a real estate agent or an electrician, you're not going to get out of liability for your acts as a plumber, electrician, with the corporate entity. So don't get confused. A lot of times people come to the corporate idea with, I'm going to be protected. I'm going to protect my assets.
Yeah.
It is not for professionals.
And why do a lot of self-employed people come to me with this LLC thing? And especially like property flippers. I noticed a lot of property flippers. I got an LLC, I got an LLC, I got an LLC. Why did they do the LLC?
I don't know. Personally, I think it's because a lot of the information available on the internet, and especially for new flippers, a lot of the classes they take will tell you got to be an LLC. Well, because in Arkansas, where the person who created the class is, an LLC is a great vehicle for a home flipper. Protects you from liability, gives you, but in California, bad.
Okay.
Especially for a house flipper. Oh my goodness. I had a house flipper client who made a bunch of money in the first half of the year, lost a bunch of money in the second half of the year, and ended at zero. They had an $11,000 California tax bill.
Wow.
Because their gross receipts were over $6 million.
Okay.
But they made no money.
Yeah.
So, yeah.
Now, is there an election of some sort? So if they did make the mistake of setting up an LLC, they've already started down that path, all that kind of stuff, and they're set up that way. Is there a way to change it over?
Yes, we can fix that. An LLC, because it's a corp, limited liability company, it's still a corporation, it can do its own S-corp election. And that's an election to be treated as an S corporation. And once you've done the S corp election and it's been approved by the IRS, you are an S corporation. So be the same as starting as an S corp.
Okay.
Yeah. So it can be fixed.
Do you suggest people do that if? Okay.
Yes. Okay. Without reservation. Yeah. For whatever business, I can't yet fathom a good business for the LLC entity in California.
Okay. And then what's the difference between the other corporations? So you have LLC, you have S corp, you have C corp, and limited liability partnerships, LLP. What are the points of each one of those?
So let's start with LLP because that's a partnership. It's not a corporation. So it is literally a type of partnership because partners are 100% liable for everything. A partnership can file a pass-through tax return, but that's not something that any of the people I think we're talking about. Maybe if you were a law firm, you could be a limited liability partnership, but real estate agents can't really be. Yeah. So that's one thing. Now the corporations in California, there's really only two. You're a corporation or you're an LLC, limited liability company. When we talk about C corps and S corps, that's just a tax designation. So when you form a corporation in California, if it's a corporation, you're the same as AT&T, Microsoft, United Airlines. You're a corporation. Now, for tax purposes, you start off as a C corporation, meaning that corporation will file its own tax return, pay its own taxes, and then share its income with the shareholders through dividends. That's that's why we use the S corp election. The S corp election says, hey, I want to be treated as an S corporation, which is what we've been talking about, a pass-through entity. One of the things that makes it different from Microsoft and United Airlines or whatever is you can only have a maximum of 35 shareholders for the S corp.
Okay.
And I only mention that in passing because usually we're talking about sole proprietors and it's one shareholder. But that's what the S corp is for. Smaller companies, pass-through entity, no tax at the corporate level, except for California, and the activities of the corporation are taxed at the shareholders level on their tax return. Yeah.
Okay. And then now the C corp, you can have as many, like.
Yeah, you can have millions of shareholders as a C corp, but it's not really good for the people we're talking about because there is a maximum corporate rate of 34%. So that corporation would pay 34% off the top, and then when it sent you a check, that would be considered a dividend, and that dividend would be taxable to you as the shareholder at the maximum of 28 federal and 11 California. So it's not a good idea.
Okay.
Yeah.
It's not a good idea.
It's not a good idea and I've run into people who swore to me, for 30 years I've had a C corp and my tax guy zeroes me out by da-da-da-da-da. Well, if you have a C corp that's just zeroing out its income by paying you a salary, then you're not really benefiting from having a corporation.
Okay.
Yeah.
Okay. What is the process of getting set up with one? If they wanted to get set up with you, what is the process of getting set up with you?
Yeah, it's really actually easy. All I need to know is the name you want the corporation to be, and it has to be a name that nobody else has used. So sometimes I tell people, give me your best, give me your second best, give me your third best, and I'll try to get whatever name you want. A lot of times people just use their, if they're a real estate agent or plumber or whatever, you can be Jones Enterprises. If you're Jones, probably not. But but it can be any name you want. I've had people just come up with some really kind of silly names because nobody's really going to see that. If you're a real estate agent, the only person that's going to see the name of the corporation is going to be your broker who writes you the check, and they're going to write it to, Funhouse Limited. I don't know.
Yeah.
Whatever that name is. So for me, I need that name. I need, obviously, the shareholder's name, address, social security number for the S corp election, and that's it. We can usually have that done in a week to 10 days.
So, three choices of name.
Three choices
and then
of names.
Just kind of some basic information.
And your personal information so that, the IRS knows who you are.
Yeah.
Yeah, and you're on your way.
And typically you charge, $9.99 for a full corporation, and that includes the filing fee.
The filing fee, and what I do is I do the S corp election. I get the tax ID number. I provide you with the paperwork you'll need to open a bank account, and all of the documents showing that you're legit. You've got a corp.
Perfect. So I get this question all the time, and I'll have people say, "Hey, I got set up in Wyoming, or I got set up in Nevada, and I got set up in now I don't have to pay taxes because of this, that, and the other thing." Is that even possible?
No.
That was pretty dramatic.
If they set up a Wyoming corporation in their California business, and they think that they're not going to pay California tax, then that's the kind of stuff that gets you sent to jail. That's just tax fraud, pure and simple. California and all other states tax you based on the activity in their state. So if you're a licensed real estate agent, obviously all of your income comes from California. You can't hide it in another state. You didn't do that, earn that income in Wyoming.
Yeah.
So, but leaving it off your tax return gets you into serious trouble.
Oh, okay.
Yeah.
All right.
So, and I know there's a lot of stuff out there about, set up a Nevada corporation and stop paying California tax. That is they're just pitching you to commit tax fraud.
Okay.
Yeah.
Okay. So now that said, what we're going to do for everybody that is on this, we are going to be giving a $500 discount. So Marc can do a corporation anywhere in California?
Anywhere in California.
and we're going to do a $500 discount, so that's $499, and that will include the filing fee. What is the filing fee nowadays?
It's $100.
Okay.
For the state of California.
And they discounted that for a little bit, right? Wasn't it like $15 for a bit?
It was actually free until end of June.
End of June?
And then it goes back to the $100. Yeah.
Okay,
So
if you
but
get
we'll
it in
pick
right
that
now.
up. Yeah.
All right, perfect. Well, thanks so much for coming in and
Thanks for having
explaining
me.
all this.
Yeah.
And hopefully there's a bunch of business coming your way.
Yeah. Well, hopefully we can help a bunch of people.
Thank you.
Yep.
And then down in the below, we will also have a link for you to fill out, and it will just have your choices of names and how you want it set up so that you can get your corporation going. Talk to you soon. Bye.